This is Robert Sinn at the Metals Investor Forum in Vancouver, Canada, May 2024, and I'm with Doug Ramshaw. Doug, my interview is going to be a little bit non-conventional because I think you did one already, talking more about the company. I want to ask you some different questions. First of all, I noticed the share price has gone up recently from about 27 cents to about 35.5 at Friday's close. What would you attribute this strength in your market to?
I think the news we put out in February was important for our shareholders this year because whilst we've been waiting on a permit amendment at Santana, we came up with a plan over Christmas to utilize the existing pad space to get production up and running again this year. So, if you're not producing gold, why should you rally in a gold market? But in our case, we should be getting back to free cash generation in the second half of the year with this mining plan. So we announced that in February. We confirmed those plans were starting in April, and I think that's probably been the main reason for it. And then on top of that, we're kind of surfacing some hidden value on a copper asset that we had, and we think that we can do the same thing on the gold space for our shareholders and low capital intensity gold production. So we're going to incubate a copper company to spin out in due course.
The copper asset acquisition was really interesting to me, and I'm kind of interested in your thinking in terms of why you made that acquisition and what is the value opportunity that you see there.
I've always been a big fan of SX-EW copper. It's kind of the sister of open pit heap leach. It's just a different reagent, sulfuric acid over cyanide. Interestingly, these oxide copper deposits, it's funny, you see, and bankers will talk and come up with these charts that show discoveries are becoming deeper and deeper. And that's in many ways because all the easy green rocks at surface have been found and kicked over. This is, and likewise, SX-EW copper production has been falling off because it's these low capital intensity oxide projects. This was an asset that has been embroiled in legal battles in Mexico for many years now. We think that those have largely been resolved. So it's been kind of frozen in time. For me, it's particularly nostalgic because when I moved to Vancouver in 1997, it was to work with a company that had this joint venture company with Phelps Dodge in Mexico and the joint venture company owned Piedras Verdes, which has now become a mine, and Swaki Verde, the one that we're acquiring. And Swaki is a great asset. It just was smaller than Piedras Verdes, and so it didn't get the same attention. But we, again, just kind of frozen in time, we see tremendous upside. And it's a project that maybe is a $30-40 million capex to build a meaningful copper mine, as opposed to so many copper projects that have hundreds of millions or even billion-dollar capex to them. It's like
30-40 million is extraordinarily cheap.
For a copper asset.
And what kind of cash flows might that be able to accrue?
Well, I mean, we should be spinning off between Los Verdes and Swaki. We think that there's two assets there that can generate 60 plus million pounds of copper production annually. I mean, at $4 copper, that's a $240 million revenue number on it. And from a cash cost perspective, these aren't just low capital intensity to build. The operating costs, as long as your sulfuric acid prices aren't spiking and the like, should be very meaningful. Los Verdes, we've done a kind of a rescoped project where I think even using 325 copper, it spits off its starting capex every year in operating cash flow, like $25 million, something like that in operating cash flow. So they can be very meaningful. But right now, we're given no value for it by the analyst community or whatever, because we barely talked about it. So now we're going to start talking about it. Now we're going to try to kind of unlock this hidden value in Minera for our shareholders.
So you think that's part of the reason why the share price has picked up in the last couple of weeks, is people are appreciating the potential that you can unlock there?
I think mostly it's to do with having a new operating plan for Santana. So we're going to have meaningful gold production there. That's what our shareholders have primarily invested in. So I think having that plan over Christmas we made a tough decision last year to cut back production. and preserve the balance sheet. And now we've still got this clean balance sheet, $20 million in working capital, $13.5 million in cash at year end, that has allowed us now to, push Santana back into more meaningful production. So if we'd pushed production last year, which is what the market wanted, maybe we could have blown a giant hole in that balance sheet. So it was the right decision. And now in 2024, we should have a far more favorable outlook for our shareholders as a result.
Okay. You said something interesting a bit earlier, and a lot of gold investors are often baffled when their feasibility or, exploration stage gold juniors are not moving up along with the gold price. And you said, why should we expect our share price to go up if we're not extracting and selling gold into the market at a higher rate or what have you? But still, you have a lot of gold ounces in the ground. So in theory, those gold ounces, the future value of them goes up when the gold price is at 2,300, at 2,400, right? How do you view being able to, extract that value for investors and really show them a pathway to more ounces per quarter, more ounces per year?
Yeah, I mean, the big thing, and it will be the permitting of Sero de Oro. That's a step change in our production profile. So if Santana only is a 20,000 ounce a year mine for the next 5-6 years, it will still spit off $10 million in free cash, which was its starting capex every year. So it's a beautiful little ATM for us. But we shouldn't kid ourselves that, we need that step change in production. And that's what Sero de Oro is. I mean, that's the base case in the PEA was 60,000 ounces a year for 8 years. We're actually permitting this upside case, which is closer to 90,000 ounces a year for 11 to 12. It's a huge jump. It's also a sub-1,000 AISC project. So at a time where the industry cost curve is kind of $1,300, $1,400 an ounce and pretty sticky at those levels, Mexico offers an opportunity not just to build these things cheaply, but from an op cost perspective, you're running really good margin assets. So we don't need $2,300 gold, $2,000 gold, and we're probably talking $1,000 an ounce operating margin there. So anything above that is gravy for us. And so, but you need, for a company to really participate in a gold rally, you need to have a meaningful path to actually produce the very gold that is now worth $2,300.
A meaningful path.
And I think that's what we've got. And you're seeing a lot of exploration companies, maybe they're finding it a little easier to raise a bit of cash right now, but arguably they've still got to find gold. And they've got to, we've got our gold. We now just need to develop these mines to take full advantage of it. And arguably, if we'd produced the gold we were going to produce this year, last year, we'd have been getting $500 less an ounce for it. So it has gone up in value for us in terms of what's in the ground.
Could be a blessing.
Yeah, smart thinking. Yeah.
So the permits for the, Sero de Oro are the big topic. And there's something that you must get asked about every single week and maybe multiple times a week. There is some controversy about this in Mexico currently. And obviously, once you are awarded those permits, it's a huge value driver for the company. So what is your current thinking in terms of the timeline for those permits, and what's your level of confidence that you'll receive those permits?
I mean, we're still hopeful we get those permits this year. And the nice thing for our shareholders at that point is we've got a funding package lined up. So we get those permits whenever they drop. And we're about to go into an election. So, things will... The
election is in October?
June. The new government takes over at the end of September or early October, I think, but June is the election.
Okay.
And the open pit mining ban, which is a big red herring, requires 2/3 majorities for the party in both houses of Congress. And the Morena coalition only has probably less than 50% in the lower house. So it's not likely to happen. We're very comfortable that Sero de Oro is an important mine. We have state government support, local support for it. It's going to be a great mine for Mexico and all our stakeholders and our shareholders. And the nice thing is when those permits come, there's no overhang of how are we now going to fund the build of it because we have a funding package to draw down. So I think we can have a real rubber band move on the stock because suddenly the analysts are going to say, wow, this thing, now there's nothing in the path other than a 6-month construction window to get that one up and running. And as I say, it's a step change in our production profile. So very excited for the future with that.
Sounds very exciting. Doug, thank you for your time.
Thanks, Robert.